it's a partnership, and you gotta work with people, make friends, and this is what this is for. I know mostly everybody. I've worked with mostly everybody here. If I haven't, call me. We'll work together doing something. And that's what it's all about. Working together. Everybody makes more money. Everybody's happy. They trust the people they work with, which is me, or Ruben, or Grayson, or one of these guys here. We try to not be around people we don't trust. We try to get rid of them quickly. Everybody I work with, I trust. It's always a great partnership. We bought a property from Nick before, a couple of them, and sold him a couple also. And you would think, well, we kind of look at the same stuff, but it's too far. I don't want this. Here, Rick, go buy this house for me. Okay. And the same for me. I had one on Houston Street, or I don't even, Crockett. And I looked at it and I said, oh my God, this is horrible. I don't want to do this. But it's a great price. So, okay, Nick, hey, give me $3,000 or $4,000, and okay. So he took it and owner financed it and wholesaled it. I owner financed it. So, a lot of great people here. A lot of knowledge. So, Grayson's going to talk to us about hard money lending. So, here you go. Thanks, sir.
Yeah, I'll stand. That's cool. I'm going to use my hands too, so stand back. But yeah, it's an honor to speak to you guys tonight. Again, my name is Grayson Wester with Corridor Funding. So we're a hard money lending company based here in San Antonio. A little bit about myself. I've been investing personally since 2015. I started out with a mentor, taught me the business, and did some deals working with that mentor. Did some on my own, ended up partnering up and working with some related people here in San Antonio, and we ran basically a high-scale wholesaling and rehabbing business where we do like 50 to 75 deals a year. So contracting them and then determining whether we're going to wholesale or rehab or whatever. So from the hard money side, that's really helped me because it's not just a concept of, real estate investing. It's like, I've done it, and the people on our team have done it, and we're educated in it. So that's a lot of the value that we get to add to investors it's not just processing the loan, right? And so one of the things that Rick mentioned is partnerships and looking at it as a team mentality. And in this business, just like Rick said, your contractors, your title agents, your insurance agents, your lender, everybody across the board, you've got to have that trust with them that they're going to follow through and do what they say they're going to do, right? Because I think about San Antonio. San Antonio's grown like crazy, but it's still very small when you talk about the real estate investment community. So anyway, that's a little background about myself. So, at Corridor Funding, we're based here in San Antonio. Office is in Spring Branch. We lend in Texas, all over Texas. We lend in Florida, Georgia, North and South Carolina, and Tennessee. But our main focus is Texas. So we do a ton of business here in San Antonio, obviously, because we're based here, but we do stuff in Canyon Lake, Medina Lake, Seguin. We've done stuff in
Burnett, Poteet,
Floresville, all over Texas, right? So unless it is like in Fort Stockton in the middle of nowhere, we can probably lend on it. If it's somewhere that you should be investing or want to invest, we can probably do it. As far as loans are concerned, we keep it super simple. There's hard money lenders out there. I was telling somebody earlier where it's like, if you go to the local Chinese buffet, you're going to get a lot of options, but the food's not going to be really good, right? And so we focus on really two things. We do 1 to 4 unit residential, so that's the main thing. And so with 1 to 4 unit residential, we do fix and flip loans, bridge loans, and new construction, and then 30-year rental loans. And then we also do some small multifamily. So, Rick called me, a couple weeks ago, and he was like, hey, do you guys do RV parks? I'm like, nope, I'm not going to waste your time. It's not what we do. And I, gave him some direction. Hey, here's my opinion of where you might find a good place for that, right? So basically anything in the 1 to 4 unit kind of range, that's our bread and butter. We can get that done. So fix and flip, bridge, new construction, and then 30-year rental. We're a local lender And so one of the things that I, kind of talk to people about is, there's different types of financing in the real estate world. And, you can go private money. Private money is great if you can raise private money. It's flexible, it's affordable, and when I'm kind of talking to our clients, I explain, private money is a relationship, hard money is a business. And that's not saying that private money lenders don't run it like a real business, but you're going to get terms and flexibility and things with private money that most hard money lenders can't do. And so there's just different uses. And so if anybody comes to me and they say, hey, I've got a private money lender and they're giving me, 3% interest, dude, take that and use it. But when your private money lender runs out of money, or they go on vacation and you can't get a hold of them for 3 weeks, or they're super slow with processing draws, or however they do it, right? Those are the differences with financing that I just encourage people to pay attention to, because they're similar but different, and there's pros and cons to everything, right? So from a hard money lender perspective, we're never going to run out of money. So you're never going to call us to fund a fix and flip deal or a 30-year rental deal or a new construction deal. We're going to tell you, hey, sorry, we don't have enough money for the rest of this month, right? That's not going to be a problem for us. And so it really, the limiting factor will end up coming to how much money do you have to get through the deal, right? And so, if somebody calls us, we pre-qualify them super quick, and we'll be able to give them terms of, here's what we can do, here's the interest rate. And, you mentioned, the cost of hard money, and I'm going to stop talking pretty soon because I want to open it up for questions, because being an investor and knowing the history of hard money, it sounds terrible, right? When you hear hard money, it's like, what does that even mean? And a lot of people have this perception of hard money that's very negative. And what I like to do in my approach and our team's approach is to educate people and to normalize it and give information. Our number one priority is transparency, because we want you to know what you're signing up for, what you're getting into, and try to avoid the gotchas, the horror story gotchas that you hear about from hard money. It's like, oh, you get to the closing table and then they raise the interest rate from 9 to 16% all of a sudden, right? That sucks. And that happens. And so that's why I say that we can start off on our back foot, because people come to us assuming that they're going to be taken advantage of. And it's just not the case. And we're not the only good hard money lender out there either. There's a lot of great companies as well. And there's bad companies too. So education's key. And then as far as interest rate range on a fix and flip loan, our interest rates range from, for super, super qualified people, 7.95 to somebody that's like newly starting out. I'm cool with that. Somebody that's newly starting out is going to get like 9.95%. If you go to private money lenders, it all depends on what you set up with your private money lender. I know people that are getting 4% with their private money lenders, and I know people. Who is that? They're out of state, but they've got a great pitch where they say, "Hey, how much is your high yield savings account paying you right now? 0.5%. What if I could multiply that by 6? Oh my gosh, that's amazing!" And so that's where those deals come up. But I know people that really have that with private money. Most private money is going to be somewhere in the 8 to 12% range, depending on your experience or relationship with them. So our interest rates for hard money are really not that far off. There's a lot of other moving pieces to it as well, but those are some broad strokes. And I think the last thing that I was going to mention before I open up for questions is understanding the financing component will make you a better. Whenever I look at a property, if I'm looking at a house, I'm figuring out what my purchase is and what my exit is and what my financing for that exit is. So from start to finish, I've got it planned all the way through. And so that's the other part of the education is, if you can understand how a lender is going to look at an investment deal, it's going to help you buy better on the front side. Because the thing that I hate is talking to an investor who got in over their head and they're hoping for everything to go really good and they want to refinance it and keep it as a rental, but they didn't do their due diligence, and this is actually not a really good rental property. And if we would have just taken a little bit more time up front, we could have avoided it. So those are some kind of general thoughts about hard money and what we do. Again, fix and flip, bridge, new construction, and 30-year rental, and then we do some small multifamily lending as well. So yeah, I really just kind of want to do Q&A. Any specific questions that you guys have about qualifications, process, whatever, because I think that's going to be what's most helpful for you guys. So I think you maybe raise your hand first.
What is the term bridge?
Great question. So and that's a perfect example of the concepts and terms and things like that. So a bridge loan is a short-term loan for like 12 to 24 months where we don't lend any renovation funds. So we're closing one in North Carolina tomorrow, and this guy bought an 8-unit, and he did a rehab on it, and he wants a 24-month bridge loan because what he's going to do is get it rented out, get it performing, and then his model is to sell turnkey rental properties. So he doesn't need a 30-year loan. He needs 24 months to get this thing seasoned, to get it where he can list it on the MLS and sell it to somebody that's just going to put a 20% down payment on a conventional loan, right? So a bridge is really just a loan to get you from here to there. Another instance where we might use a bridge is like wholesale. If you guys are familiar with wholesaling, where you buy a property that we're not going to touch it. We might like clean some trash up, but we're just going to list it right on the MLS and sell it. That's another use of that. A lot of you guys have talked about short-term rentals and Airbnbs. This is a big part of understanding the long-term financing part of hard money and even conventional is a lot of, in the hard money lending space for like long-term loans, with short-term rentals, income seasoning is huge. And that basically means the lender wants to see that Airbnb is actually producing money, typically for 12 months before you can refinance it. And so, you can go conventional and they don't have those kinds of requirements, but as some of you probably know, conventional lending is way more stringent. They're looking at your income, all those kinds of things. So anyway, those are some of the uses of the bridge loan.
Yes, points. What's your point structure, how much you charge, and how much do you lend on loan to value?
Great question. So points, this is another thing I'll share a little bit about that. It's the origination fee. Basically, 1 point is just 1%. It's that simple. Somewhere along the line, lenders wanted to make it sound more complicated than it really is. But so we typically charge 2 points for the origination fee. For somebody that is a little bit more inexperienced, or maybe has no experience, we might go up to 2.99 points or so. But I'd say most of the clients that we work with are more experienced, but we're going to be somewhere in that 2 to 2.99 range. In the hard money space, depending on who you work with, you're going to pay, anywhere from 1.5 upwards to like 4 and 5% for points. I call them big box national lenders. These are like Lending Home, Lending One. These companies that are like based in California and New York. Every single time you call them, you get somebody different. They're going to be lower on cost, but the service and the communication and the timeline is where that's the trade-off for those companies. Yeah, 2 points in the 2-point range typically for us. And then the way that we look like on a fix and flip loan is it's all based on experience. So somebody coming in that has like no experience at all, that's getting started, we'll do like 80% of the purchase price, 100% of the renovation costs, up to maybe like 65 or 70% of the ARV. And then as you get more experience, 1 deal, 2 deals, and on from there, the max that we can lend is 90% of the purchase price, 100% of the rehab cost, up to 75% of the ARV. So, and that's all on our website too. And Mark actually works with me at Corridor Funding. So if you guys want to call and get pre-qualified, learn more and kind of figure out what you specifically would qualify for, that's what we're here for. So it's all driven by experience mainly.
What's your cost per draw?
Cost per draw, awesome question. So our draw inspection fee is $189 per inspection. So this is a big thing, especially with newer investors that have never used hard money before, that I point out is that in the private money world, you may get somebody that will give you, like let's say you need $40,000 for the renovation, right? You would probably get a private money lender they'll just give that to you, right? Because they trust you, they know you. But if you go to a local bank for a fix and flip loan, or you go to a hard money lender, it's always going to be based off a draw process. Because the idea is that, you know, you're all trustworthy people, but if a lender that's lending to a lot of people gives somebody $40,000 and they leave the country, they just lost $40,000. So the draw process is there to make sure that the money is being used to improve the value of the property, right? So what we do, we use since we lend all over Texas and in multiple states, I can't drive around and check on the status of the rehab they're having. And so we use a third-party inspection company. So let's say, you know, you have your first draw that you want to do, and you know, let's say you do the roof and trash, you demo and clean out and exterior paint. Let's say that's second draw, right? So you're gonna pay for that out of pocket, and then you're going to request a draw. We're gonna send up the inspector, and they're gonna show up at the house and make sure that that work actually happened. They send us a report, and then we're gonna wire you the $7,000 to reimburse you for it. And so that $189 pays for the trip fee for the inspector and the wire fee, so you don't have to wait for a check, right? So, and from start to finish, when you request a draw to the time we reimburse you, about 36 hours. So it's pretty quick. But yeah, that's the draw process of how it works. But it's $189 per inspection, and you can take as few or as many draws as you want to.
Can you be a little bit more specific on the experience? What if you have an investor who's been a buy and hold investor the entire time, and now he's wanting to do a fix and flip? So how's that experience going to be looked at? You know, buy and hold versus fix and flip.
Yeah, that's a real consideration. we look at most people that are buying and hold investors have to do some kind of renovation, unless they're like truly buying a turnkey rental, but they're not doing any work. So we count rentals as experience. Now, we also use common sense too, because if somebody came to me and said, well, I've got 2 rental properties that I bought turnkey, and I'm going to do a $175,000 rehab. As a friend, I'm going to slow them down and say, like, hey, have you ever done a renovation in this scope before? Because that's a lot to bite off for the first property that you ever rehab. Like, it's a big renovation, even for somebody that's very experienced. So we'll count the rentals. What we really look at is, in the last 2 to 3 years, how many properties have you owned, whether in your personal name, investment properties, your personal house doesn't count, investment properties that you've owned within your name, or like an LLC or corporation that you own, right? So wholesaling, I used to wholesale for a living. We consider it, but at the end of the day, you didn't take a financial risk in owning that property. And most lenders look at it that way, right? So fix and flips, rentals, maybe a property that you owner financed and owned for a while, you rehabbed it and resold it. You know, those things count, but it's what shows on title is experience. Yes, sir.
Quick question. I've never asked this of a hard money lender, but do you guys ever do cross collateralization if you want a bigger debt?
Yes. Yeah.
Awesome.
Yeah. Cross collateralizations, that's a really fancy term that basically just means we're doing one loan that ties up a lot of properties. Right? So we tend to, so like on a 30-year loan, and these are like 30-year term, 30-year amortization, they're exactly like a bank loan, but without the personal income underwriting. We don't report them to the credit bureaus, they don't show up on your credit report, make your scores go down, all that kind of stuff. It's like in the 30-year world, we cross-collateralize by doing like a portfolio. So if like somebody had like, let's say 15 rental properties that they wanted to refinance, we could do all of those. For a fix and flip, and this happens often, like maybe somebody has a rental property that they own free and clear. They don't own it. And they've got a rehab that they want to do. And there's different hard money lenders. We don't fund 100% of the deal. There's other companies that do that. They charge more on the interest and points because it's riskier. Not our money. So, knowing that we don't fund 100% of the deal, what I would do is I'd say, hey, like that rental property, what we could do is we could kind of pull that into the loan, and we could borrow some of the equity from that to cover your closing costs and down payment. You're effectively getting 100% of your deal funded, but we're just bringing two houses into the loan.
Sorry to ask.
Yeah.
Let's say I have a lot of equity in another investment. I wanted to purchase something a little bigger.
Sure.
You guys fund up to, let's say, 80 to 85%?
90%.
90%.
Yeah.
Let's say I'm a 30 year.
Oh, 30 year. So a 30-year loan, it's very similar to the bankroll. So like they cash out refinance 75% of the as-is value. If you want to do a rate and term refi, where it's like you're not getting the cash out, you're just rolling in the closing costs, you're looking at 80% of the as-is value.
So the cost of realization of the equity that you have in another property, and those were the high is that not part of that additional 20%?
For a 30-year loan?
Yeah. Or is it only for the
Typically